In the U.S., stock index futures pointed to a lower open on Friday morning as traders anticipated a big day of data. Consumer price index and retail sales are set to be released at 8:30 a.m. Eastern Time, while business inventories and consumer sentiment are slated to come out at 10 a.m. Eastern Time. On the earnings front, JCPenney and Askunet are due to report before the bell. U.S. equities closed lower on Thursday as retail stocks fell sharply on the back of Macy's weak quarterly results. But looking at the futures numbers there, we can see they are all tilting towards the negative, showing a lower opening for today. In Asia, the markets closed mixed on Friday following the lower close stateside on weak earnings from U.S. retailer Macy's and ahead of the G7 finance meeting in Italy. The Nikkei 225 was softer on Friday, easing by 0.39% to close at 19,883.9, while the Kospi edged down by 0.45% to close at 2,286.06. Australia's benchmark ASX 200 index fell 0.7% to finish at 5,836.9. Greater Chinese markets were in the green. The Shanghai Composite reversed earlier losses to finish 0.71% higher, and the Shenzhen Composite inched up by 0.058%. Hong Kong's Hang Seng Index gained 0.03%. Away from the market, and Kenya borrowed a $1 billion via syndicated loan from commercial banks. That's $200 million more than anticipated. The East African nation said in March it was raising a total of $1.55 billion in syndicated loans, with $800 million coming from commercial banks and the rest from development finance banks. The $1 billion loan was split into a 2-year tranche and a 3-year tranche. The loan was arranged by Citigroup, Rand Merchant Bank, Standard Bank, and Standard Chartered Bank. In the meantime, Kenya's President Uhuru Kenyatta this week approved a law which allows low-income earners to secure loans from banks using livestock, crops, and household appliances such as television sets and fridges as collateral. Now, the bill was brought into law. It's called the Movable Property Security Bill. How are the banks in Kenya taking this? I'm being joined via telephone by the head financials desk at EcoBank Capital in Nairobi, George Bodo. Good afternoon, Mr. Bodo. Thank you very much for joining us on the program.
Good afternoon.
Now, what's the reaction of those of you in the banking system when you heard about this cow for cash law approved by the president?
There's going to be major reaction among the players, especially the commercial banks, and this is largely because there's still a lot of nitty-gritties, a lot of balls to be tightened around these. Remember that the president just signed this bill on just early this week, and to be precise, it was on Wednesday. And so it creates a framework for creating a movable property registry. It creates a registrar. There's still a lot of regulations to be put in place in terms of they have to appoint the registrar. We still don't know whether it's going to fit in the central bank or the national treasury, and also the guidelines, asset admissibility. We don't know what's going to qualify. But just to say that apart from the livestock, certain other movable properties will also be administered in the registry, including furniture and motor vehicles. And also apart from those physical assets, it also creates a legal framework for commercial lenders to register security interest in intangible movable properties such as receivables and intellectual properties such as royalties. So essentially, if you have a supply contract like power purchase agreement, long-term supply contracts with a reputable institution, these receivables that arise out of these contracts can now be banked, and legally now banks can take a security interest on this, and then you register that to the registrar. And also, just to note that Kenya is not the first to do this. Remember, Zambia has already have this in place, and Zimbabwe is also working on a legal framework to have a movable property registry. I think also it's time for Nigeria to look into this. I mean, look, Nigeria is one of the biggest countries, and with the lowest credit access rate, especially when you talk about personal household lending, it's very small in Nigeria. I think they also need to take a cue from this.
All right, Mr. Bodo, just a quick one before I let you go. Now, the Central Bank Monetary Policy Committee will be meeting later this month. That should be May 29, looking at all of this development. And don't forget, they capped the interest rate sometime last year. What is possibly going to be the outcome of this meeting? Just a quick one.
Quick one. So there are two things. One is the consumer price is actually very elevated. Last month, it was about 11.48%. And then that's one, consumer price is elevated. Two, is credit growth is very constrained. We're talking about below 5%. So these are two things that are going to be giving the Monetary Policy Committee ahead. I think, personally, looking at all these two factors, I think they're still likely to hold.
All right. Thank you very much for your time, George Bodo. George Bodo is the head financials desk at EcoBank Capital in Nairobi.